All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. Let's go out and take a look at the challenge, and then I'll show you some of my favorite setups here. I have not been able to watch the market, very closely this morning due to a few other things. But as I spent some time over the last hour just kind of combing through, different charts and different setups, some things really caught my eye, and I think some things out there are really interesting where they sit right here, right now. But the challenge, there are no new signals here today. I wish I could make it different, but nothing on the board right here today. Twitter, I thought for sure would trigger today, but it didn't. Consolidation risk parameter just too high. We also see ConocoPhillips on the watch list getting a 3-7 crossover to the upside, but you can see it's coming off lows. It's not we're not talking about an upward trend forming here. Even if it does go higher, we're just talking about a bounce situation here with it. So no new signals on the board right now for the challenge. So we have Verizon, and like I said, I haven't watched things too closely here today, but I pulled up Verizon's minute chart just to kind of go, okay, is Verizon doing anything today? I know it's pretty much the same spot it's been all day, but then I pulled up the minute chart to go, okay, what's happening here? Yeah, it's traded in a 24 cent range, 25 cent range here today. That's a pretty non-existent range here, especially for Verizon. If you've ever traded Verizon, to see it have one of these types of days, it's not very often. Not very often that we will see it, but it definitely is having one of these, just kind of chop, do nothing type of days here. So not hitting any stop levels or profit levels here. Option here is 217, so that's a little bit lower than what it was this morning, but it doesn't really change much there in terms of Verizon, and we'll continue to hold that here. Okay, would love to see a kind of gap above 58 and go. I think there's a pretty good shot we see 60 come in during the life cycle of our option, but we'll see how it all unfolds here going forward. Okay, so that's pretty much it for the challenge in terms of execution. Now he's asked a really good question, and I mentioned I would bring it up on video. And the question revolved around the exit parameters for the challenge in this ATR method. And the question said, can I go out and buy a trade or buy a call or a put without the algorithm signals and apply the ATR method with some success? And the short answer is, yeah, you can. You can. If stocks, and it was one of those things where during a lot of the testing phase, we went out and had some, just some baskets where we just threw stuff in here and there willy nilly just to test the ATR method. And while yes, it works in terms of giving you a stop element, it without a trend element, or a higher probability of a trend element, it doesn't work all that well. So if you start to get into for instance, a GLD, and you say, well, you know what, I'm going to go and buy a GLD right here, and I'm going to use the ATR method. Well, the ATR method bumped you out right down here just before the stock took off. So it's not something that you could just go and apply willy-nilly, but it is something that you can go and apply. Let's just say, and this is one of my favorite setups out there, Bristol Myers, and I really wish it were triggering for the algorithm for the challenge. I'd love to trade it for the challenge, but this is something I would consider going out and buying. and I will be looking at it into the close. I haven't priced the options out yet, but it's something I would consider buying. And yes, applying the ATR method here to it, simply because I'm expecting a trend to materialize. And while yes, the algorithm doesn't signal it just yet, I kind of look at things like, okay, I kind of expect this trend to materialize, so I'll go buy it with a ATR stop, and I'll look to trim it at 2 ATRs and 4 ATRs from where it is right now. And can use that as a guideline. So most certainly it can be applied. I don't think you can apply it, just randomly. And I do not think it can be applied to, I'm pretty sure I've seen how well it does or doesn't do when you're talking about stocks in consolidation that aren't really trending, that are just kind of snapping around and chopping. For instance, something like a Walgreens back here in April and May. Using the ATR method for a trade just doesn't work. You basically get stopped out every single time, most times with losses, and so it just doesn't have a lot of validity in consolidation scenarios, with stocks. So, if you're expecting a trend scenario, go ahead and apply it. I think you'll find, some success there. But if you're going to apply it to a consolidation scenario, it's going to be maddening. It definitely is going to be maddening. I think you need a few other types of, exit parameters to go in a consolidation type of scenario. Okay. All right, but it was a great question, and hopefully that answered it for you here today. Okay, so some of my favorite setups. One I mentioned was Bristol Myers. You have the 3-7 crossover here this week. You have the Stoke 49 or 39.1 pushing above 50 here, and it's not coming off lows, so definitely has a higher probability of trend. I think it's something where you can just use today's low as a stopping point and run with it. And today's low is about 35 cents away, so you don't have to take a ton of risk there with it. Now, anytime you trade Bristol Myers, there is news risks, there's headline risks, there's all that kind of stuff here with it. But, for a stock to kind of push back towards the 50-day moving average towards the 200-day moving average after it's now broken away from the 50-day moving average in a way that it hasn't in several months. You have a MACD that's pushing into positive territory that during this consolidation has had some positive flow. If you look at the MACD in general over the last 6 months, we're talking about some nice positive divergence, coming into this as the stock has based out. Let's face it, it's based out over about the last 6 months. If we pull it up on a weekly chart, in fact, let me get rid of the indicators for the weekly chart. Actually, let's just go to monthly. But you can kind of see what this looks like. This is a stock that had a monster move, just absolute monster move into 2016, and now has had about a 2.5-year consolidation. And, valuations are not all that crazy right here. And, to me, this is just one that, that story could change very quickly, and we could see some big buyers step in, after a little bit of buy pressure comes in. So something that, for me, as I look at it, I think there's a strong chance of a bigger move over time, and one of my favorite setups out there. Okay, another one that I think is very interesting, and I know I know this is going to come as a little bit of surprise, is FedEx. FedEx has had a nice little bounce here, right? Had a nice little kind of bearish engulfing, didn't follow through the downside, breaking up into a new short-term high. I think this is a very high-risk type of setup here when it comes to FedEx. But when you look at FedEx historically, it tends to kind of stack these types of days together, and we're coming off of a move from 200 down to 150, retesting these lows to say that, hey, you know what, we're at least going to see a retracement of the recent drop. I think is very probable here for FedEx. And I'm a FedEx bear overall. I do think FedEx eventually breaks into some new lows. But if we look at it in the setup right now, this 170, 175, 180 area is where I would expect to see FedEx trade, given the price action that we've seen this week, and I'd expect to see it trade there, relatively quickly. Now, it's not a low risk trade by any stretch here. If you look at some of the open interest, we don't have a lot of pin risk associated to it. But there is a larger quantity of puts here on the 170 strike. So to see market makers want to push this up to 170 by next Friday, or at least a little bit above 170 by next Friday, given some of the options and how they're positioned, I would not be surprised to see that. And so we put that together with the retracement, with the overall price action. I think this is just something, and yes, that's not a huge reward potential. We're not talking about, something, just blasting higher. It could, but, just something for a follow-through and continuation of the trend. And you use today's low as that stopping point. Today's open price, breaks today's open price. Gotta go. Gotta run. See ya. And, take care. So, anyway, that's FedEx. That's FedEx there. And then the last one here. And this is a company, a stock that has just been absolutely riddled, but it's the exact same chart as FedEx. And you think, well, Schlumberger, FedEx, what do they have to do with each other? Nothing. But Schlumberger, big drop, right? Then rallies with the market, and then fails to continue with the market, but does push into a new short-term high as the market hit a new high. It took some of these laggards like FedEx and Schlumberger up, reversed quickly, reversed sharply, came back, retested the lows, and is now in this little kind of snapback period. If we come in here and we just stick a retracement on this, right, and we click on annotate, just slap a normalized retracement on this downward move, we're talking about pushing back up into the $40 area here for Schlumberger. And if you come in and you look at where some of the moving averages are here for it, let me pull it up. You can see the 50-day moving average right up here at 40. And so, a retest of that 50-day moving average. Schlumberger has retested lows and has had some positive divergence with the MACD and other momentum oscillators. So whenever you're dealing with a bottom-picking type of play like this, it's never a no-brainer. But it is something where if you have retracements in your favor, you have some moving average targets in your favor, and you have some positive divergences in your favor, you can see the environment change relatively quickly, and I would not be surprised to see that here with Schlumberger, especially with how cheap the stock is. If we continue to see this market grind higher, investors are going to have a bigger appetite risk for, some of these companies like Schlumberger that, have just been absolutely, kicked in the teeth. But, let's face it, it does have a $26 book value. It's trading at a price to book that is, cheaper than what it's been in a long, long time. When do you talk about an oil company and a dividend, right? And I believe it's a 5.5% dividend yield. I wouldn't buy this for the dividend, as, it can move 5.5% very, very quickly. But it starts to come into where your price to sales ratio, your price to book ratio, your peg ratios, just your normal fundamental ratios start to look really cheap. Start to look really, really cheap. Then you have some technical arguments here for it, and it becomes an interesting setup to go after. Now, Schlumberger, if you look at some of the options, right, you'll see all this open interest right here on the 37.5, right, 13,000. This is just market makers going to let this thing close below 37.5 if they can help it. Probably not, right? So, you even have some option elements that could, help to, funnel it higher. Obviously, oil prices are going to, flux and ebb and flow. I think today the U.S. did come out and officially accuse Iran of the ship explosions here last night, and I don't think Iran, was really trying to hide it all that much, and I think it's a very kind of strategic move on their part. And if you're a big fan of things like game theory, you start working out, well, why would they do that? What positives can they get from that? What negatives could come from it? Bottom line is, it does look like a North Korea approach, where for years, North Korea would use the approach of, hey, we'll go throw a temper tantrum, we'll do something that the international community doesn't like, and to shut us up, the international community will give us some concessions and, send us aid and send us this and send us that just to get us to stop doing what we're doing. Right, it does look like Iran is looking to play those cards, and some interesting comments out of U.S. President Trump today, in regards to Iran, just basically saying the U.S. isn't ready, Iran isn't ready for any sort of deal to be made between the two countries, and that's something where, in the past, when we've seen North Korea fire missiles and do different things like that, the U.S. has stepped in and said, okay, if you stop, we'll give you this and this and this. The political environment's very different now. And we've seen different style reactions to some of the normal games that have been played by some of the countries over the course of the last decade. All right. But Schlumberger is going to be kind of beholden a little bit to that. But you could also argue oil is oil's getting pretty cheap. If you do see Russia, pledge a few more production cuts, we could see a nice little snapback in oil. And so I think Schlumberger is a very nice way to play that. Nice little setup, can use the 7-day moving average, and look to play this up towards the 40 mark going forward. Okay? Alrighty. Well, thanks for hopping on. Have yourselves a great day, and we'll talk to you tomorrow. Take care.